Global liquidity is expanding thanks to the US Fed, but Asian peers are flashing warning signs. We are looking at a GIFT Nifty call that suggests a solid gap up of around 82 points, driven by the optimism of record US highs. But don't chase that opening blindly. That positive mood is immediately facing resistance from profit booking in Asia and a massive localized threat, a 50% tariff hit from Mexico, directly impacting our auto exporters. The battle today is between strong macro tailwinds and sharp micro-sector specific risks. The baton handover from the US was decidedly bullish, albeit selective. The US Federal Reserve delivered its third consecutive interest rate cut, lowering the key funds rate to a range of 3.5 to 3.75%. Crucially, Fed Chair Jerome Powell provided distinctly dovish commentary, effectively ruling out any imminent rate hikes. This commitment to lower rates structurally favors risk assets globally, including Indian equities, by lowering the US 10-year Treasury yield to approximately 4.1%. The US dollar index also slipped, hitting its lowest level since October. This dovish signal drove the Dow Jones Industrial Average and the S&P 500 to new closing records, surging 1.3% and 0.2% respectively, showing a clear rotation into non-technology blue-chip companies. However, the Nasdaq Composite lagged, dropping 0.3%. This split was triggered by Oracle, which plummeted nearly 11% after reporting higher capital spending but softer revenue than expected. This is critical. Institutional money is demanding execution and efficiency, not just AI narrative, a trend that warrants scrutiny for our own IT pack. Our market resilience remains anchored by domestic institutional investors. On Thursday, FIIs booked profits, registering net selling 2,000 crore rupees. But DIIs aggressively stepped in, injecting a massive 3,700 crore rupees. This continuous, structurally sticky DII inflow acts as the primary stabilizing force, absorbing foreign selling pressure and providing a strong technical flow for the Nifty. Listen closely for actionable intelligence on two key sectors. First, the metal and mining space needs your attention. Hindustan Zinc is a direct beneficiary of the unprecedented silver rally. Global spot silver has surged recently, crossing $63 an ounce. The primary driver is silver's reclassification as a U.S. critical mineral, elevating it to a strategic industrial commodity essential for solar and electronics. This structural re-rating fueled strong buying in Hindustan Zinc, one of the world's largest integrated silver producers, whose shares jumped nearly 5%. This theme suggests long-term demand growth for select producers. Second, automobile and related exports face an immediate sharp headwind. Mexico, a major export destination for India's manufactured goods and vehicles, has approved significant tariff hikes of up to 50% on certain Indian imports. This move directly impacts major Indian car exporters, dealing a serious blow to up to $1 billion worth of shipments. Automobile export companies that rely heavily on Mexico, our third largest car export market, must now re-evaluate strategies immediately. On commodities, crude oil prices are still weakening, despite geopolitical noise, which is a big macro positive for India. WTI crude is trading around $57.96 per barrel, near multi-week lows, primarily due to global surplus expectations. This structural weakness is a massive tailwind for India's current account deficit and helps mitigate imported inflation. Meanwhile, Bitcoin, a proxy for global risk appetite, climbed toward $94,000 following the Fed cut, although it later handed back some gains. Standard Chartered still maintains a bullish outlook, projecting Bitcoin could reach $100,000 by the year end. Final thought for today: leverage the domestic dominance. The market is enjoying a dual tailwind, global liquidity expansion and favorable crude prices. Use the expected GIFT Nifty gap up to focus on domestic cyclicals and financials, sectors positively anchored by the strong HDFC Bank ADR close. But hedge against the tactical risk presented by the Mexico tariff bombshell. Identify exporters facing those 50% duties and approach them with caution. That's news that move markets. I'm Prem, and we will catch up for the evening show.